The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 5th day of May. Very important session for a couple of reasons, and also I got a couple of emails, we'll be able to deal with a chunk of things at the same time. So let me just first run all the numbers. The Dow is at this particular point, it's down 15 at 20,959. The S&P is up 247 at 2391. Comp index is up 1 at 6076. Gold is down just 60 cents, 12.28. This is a very important phase for gold. I'm going to talk about all these things coincident. I had a discussion about trends, and you've always said that one particular event can't change a trend that is in place, and I'll talk about that. But of course, there's a corollary that has always gone with that, except in those rare moments when whatever you are following has a potential to be making a low. That is, it can't be in the middle of a trend. It has to be right at the edge at the bottom or the edge at the top. So that fits the whole panoply of aspects that we're looking at now. So that we'll deal with gold, we'll deal with the dollar, the euro, etc. as we move along. Let me just do this. High-grade copper is at 251. It's up 165. Not bad. It's just it's had a real strong move to the downside. I'm not sure how I'm going to put this together if I have time to put it together with the world economies, which I think actually are improving, and high-grade copper, which is actually just, it's not really showing us strength. It's actually not yet showing us a breakdown in weakness, and put that together with the jobs number, etc. Those are fundamentals. I'll try to put together with some of the technicals if I have a chance. Crude oil is up 1 at 46.52, made a low in the 44s this morning, a low. I don't know if it's the low yet, and that's the reason why this particular moment coming up on Sunday night, and someone said, well, what's the big deal? And I just keep hearing election, election, election. The reason why we're talking about the election is that with Brexit and with a week and a half ago with France, the futures loved whatever happened and powered to the upside. The original one back in last year when we had the Brexit plunge, and I can't remember now, and the markets fell, and then over the evening period they spiked higher. That's important, as well as the election day. All these things are very important in terms of a short-term power move. I'll explain why there'll be a little difference here. Let's just get this done. We've got bonds unchanged at 151.24, and the dollar at this particular point is trading down 0.07 at 98.57. Euro is also about unchanged. Now there are a couple, and British pound is pretty much unchanged. I've got the 2-minute chart, wanted to show you because this is Technical Friday, and people have also asked me if I would show this, if I don't mind. The techniques that I use when I'm looking at the intraday, what I want to trade, how I want to trade, or anything like that. I'm not going to talk about the trading part. What I want to talk about is the 2-minute chart. Hit this green line, the 200-period exponential moving average. A 200-period moving average in a 2-minute chart means exactly the same as a 200-period moving average in a multi-year, 20-year chart. It is a visual of a level that could become a support or resistance, and that's exactly what it became right there at 8:22 this morning Eastern Time at 23.85.25. Started a move that went peak A, peak B, peak C, peak D. Oh, I don't want to do that now. Let me just say, in the Chapman methodology, you want to identify the lowest, most obvious low bar and merely count each successively high peak until you get to the fourth highest peak. Peak D is where other things can happen. Well, what happened was there was an arch formation, and if you take this as the plumb line, I love when the mathematical formula looks like it might work. Sometimes it doesn't, and you have to use other techniques. But in this case, the Chapman wave technique of the left side, right side, price, time, Chapman wave match has the left side number of bars equal to almost exactly, the right side, which would have been at 1042 this morning, to go to that 2385 area. And instead, what it did is it got there at 1034, a few minutes early, broke under it, closed above it, and that says, good. In the Chapman methodology, the arch or the H pattern says that if you do that, you can rally, and whatever it is, and you can rally to at least the next period moving average line of resistance in this case. And if you take that out, look for the left side peak. That's that peak right there at 1032. And if that's taken out, there's a chance you could have a left side, right side price time match on the upside. And that would say that if it was to succeed in going to well, in this case, a leg D, but that wasn't the point. The point was that if it succeeded in the rally, the strong resistance would have been right here between this bar at 2388.75 and this bar right here at 1014 of 2389. And where did it stop so far? It stopped dead right there at 2388.25. Just below, made a third lower high. Let's see what happens now. Wanted to show that these techniques, it doesn't matter. And the reason why I wanted to show it is here, look. Here's the NQ. Stopped dead at leg E, made a peak E. There's a chance that I could call this an alternate count, and that would be E/C. So there's a chance that we could go to a higher high. Why am I making a big deal of this? Because the NQs, the NASDAQ, and the QQQ series right here, which the Power Shares QQQ Trust Series trades on the NDX 100, have formed the same patterns, and the stochastic is really strong at 94%. It is starting to turn down. MACD is just starting to flatten out a little bit, but it's still very strong. And that says you're at the outer edge, and that makes this particular news event this morning was the jobs. Hasn't done anything. Look at the Dow's down 22 because of IBM mostly, but the S&P is only up 1.40. And that's saying to me, and I'm going to go into a part of the question which I think is really important to cover. It says to me that the power of the rotation going to highs is really important, and they go successively. They don't always culminate on the same day, as opposed to major lows, which very often occur within the same day or within a couple of days of one another, because the selling pressure is so intense, the VIX skyrockets, and it just releases all that energy at a moment's notice. It's different to the tops. And in this particular instance, the QQQ is rotating the Dow and the SP. So here goes the question. What was the question? So Kevin says, would love to hear you discuss today how you've stated so many times one event won't change a trend. On TFNN radio, all I hear about is damn French election, easy out. Any goofball technician can take this stance. Disappointing. So what should be disappointing is that under these conditions, there hasn't been a breakout of significance. However, have a look at this. The analysis that I did for the Dow with that March top, in the greatest bull market that we've had, maybe not in history, but one of the great bull markets of all time, had a peak on the 1st of March in the Dow and the S&P coincident, and we have not broken yet to a new all-time high. We've had all this time, we just haven't seen this kind of digestive moment. But the Qs went higher, and that's what I'll talk about. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, we're back. Dow's down 18, S&P is up 2, and I will continue this preamble. It's a post-amble now. I first want to go to Ben in Tallahassee. Ben, how are you? Hi, Ben.
Hey, Basil, how you doing?
Well, you weren't expecting to get so soon, huh?
Yeah. I just got a few quick minutes, but I one question. If you look at the GLD on a monthly basis,
yes.
How often do you get a single leg A phenomenon in a monthly chart?
In a monthly chart actually, let me just show this in the proper perspective, and that's going to squeeze it.
That is an A. Maybe that's the first question, right?
So we've had a whole series of single leg A failures all the way down, A minuses they called, because they went straight up and straight down. But they were relatively small, going from 114.68 to 137. I wouldn't say that's 20 points. 137 just looks small on the scale that I've got. So yes, it happens in a down mode. And what happens in a down mode is that you get some kind of news-related, but it is also technical, and it could be rotational, a power move to the upside that takes it up. Now, I think if your question is how often do you get a single leg A up in the monthly chart that's very strong, but only 2 months, say, that happens only in a very persevering down mode, as you can see from that low that was made back in 2013 in June. And then there were many after that, 3 bars in an A and failure, 2 bars in an A and failure. But the last one that I think you're looking at was from the low, the left side, right side price time match low in the GLD. That's the gold spider ETF with that little beautiful doji candle back at 100.23 in December of 2015. We've made basically a single leg A to the upside. We've pulled back pretty sharply, and now we're in the process of making a 120. Yep, this is leg B, a gray leg B to the upside. So if your question is, with the technicals that we're looking at, is this an unusual occurrence, and is it even something that you want to conceive? Yes, if you want to look at many charts in major down modes, it does happen. And then sometimes when you get close to what, in this case, the 200-period moving average of the continuous contract, that December low on 2015, it went off the 200-period moving average. And at this particular point, it is still a magnet. until it breaks until gold can get into the 1320s, 1330s to start a leg C. This magnet is there, and that kind of, if you've got a moment, and you're.
Well, let me. I guess.
What are you
I'm
doing?
sorry. You know what? I must have missed it. I must have missed the B. So it's actually in a.
It's in a gray B below the major A that was made, peak A at 1393 in gold, and the GLD, that price was that was right there, July of 2016 at 127.05. And now we've got, and that was a gray A. I haven't made it a gray, but this is really a gray meaning it's under the previous high, and until it takes it out, you've got to consider that it could fail. That's all it is. It's an explanation. It's not saying.
I'm sorry, Basil. So I'm looking at. Okay, so I got December 15 is the bottom, right?
Correct. Yes.
And then I don't see where you get a peak until July of 16. Did I miss a count?
So we've got a peak. Oops, let me get out of that. So the peak was July the 16th, and then it pulls back. But you remember, in the rule of the Chapman wave is you've got to notate every peak and trough if you want to be. Your obligation in the Chapman wave is just one thing. It's not to miss a peak or a trough by a penny. You've got to get every one. But that has a part A and a part B. And the other is that you want to count every one. So this is, if you go to the low that was made in the month of December of 2016, a year later, that started a move that went to a high in March. No, I'm moving the mouse too quickly. 120.40 was the high in March, but the high of February, but the high of March was 120.08. So it made a 32-cent lower high. So that counts as a peak.
I'm sorry. Which one is peak A?
So peak A is underneath on February. It's a gray A because in March you made a fractionally lower high, and then you took it out and you've made a leg B. So far this is called leg B. If there's no new high above 123.07, it becomes a peak B, but a gray. I call it gray just to explain to people who do a lot of Chapman wave notation that it's under the previous high, and you've got to realize it's in a trading band until it takes it out. Is that clear?
Oh, I'm sorry. I was taking. I was going all the way back to December of 15.
Yeah. So this has started what I call an inside buy mode because it's starting another one.
Okay. So okay.
And someone who knows my Chapman wave very well said a count within a count. I usually say buy mode within a buy mode.
Yeah. I guess the grays I don't really look at too heavily. But from a priority standpoint, you'd still consider the first one the priority, right? Or the
That is the priority, only in the sense that if it's taken out, if you go even a penny above 131.15, it starts leg B, and all of a sudden the left side highs are 133.69 back in March of 2014, and the very last one, the most important one of 137.55 back in August of 2013. When we do, and we will at some point, when gold eventually spikes and GLD spikes, this is the Spider Gold Trust, spikes into that area, it's upside is starts to expand tremendously.
Got it. Where do you see then as your critical support?
Well, let's put it this way. I'm going to tell you exactly, and then I'm going to go back to my discussion of what happens in trends, and so that'll explain what if this and what if that. So in the meantime,
got it.
A close under 116 in the GLD would be very negative and suggest that there could be bounces, but you're going to have to do a lot more testing in the 115 to 114 area. And a move that by Monday or Tuesday sees the GLD above the 9-period moving average of 118.88. Let's call it 119.50. You go above 115 in the GLD with a dollar declining and the euro rallying. All of a sudden, that's what I wanted to talk about. So that brings me to my point that I was trying to make.
I'm sorry. I know about your gray legs. I just wasn't even paying attention to that.
So without any of this Brexit coming up the Frexit coming up. I would be looking at this, and I say gold is not quite ready. It's getting closer to something that I think would be a very nice trading bounce. But because of the peak C that was made with their doji in the weekly, this is just a little too strong in the weekly, because all that can happen now is there's a great rally, and maybe it gets. We'll see, because if we can take out 123.07, that starts leg D in the weekly, if it holds that all week in that area, all of a sudden I have to look at this completely differently, and we'll look at the currencies.
Got it.
Hope that helps you.
Thank you very much. Yep.
A good
Have a great
question.
day.
Thank you for calling. That was Ben Tallahassee. We're down 27, the Dow up 135. I want to get back to the points that I wanted to make, and Paul asked a very good question, and that has to do with the Dow and the Nasdaq, and we'll look at that in a very short.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Excuse me. So let's just continue with this theme, because I think Kevin brings up a great point, which I'd like to deal with, and that is, what's with all this noise about can it change a trend? I mean, that's really the issue here. So let me just show you what I'm talking about. You see the stochastic here at 4.45% in the GLD. This is the Gold Spider Trust. Trades at 1/10 the price of gold. Look at the MACD, how ugly that is. Look at the steepness of the stochastic. Look at the way the on-balance volume is pulled back. Even if you're looking at volume, we've had huge volume on the way down. Look at that spike there. Look at that spike there. Right at the exact low, we had a spike, but I looked at that spike At the time, no, I only saw the spike a little late and then said, oh, that's my 28 bar rule of a heavy spike into a low with a very high volume. So that's out. That's another one of my proprietary techniques, but that one didn't work. I mean, I didn't see it until too late. But I did recognize the oval pattern, and I discussed it as if it was a body in the Chapman wave stalk leg formation. What's the stalk leg formation? It goes straight up. You don't count the legs. It's got nothing to do with that. It's really a straight up move. Then it goes sideways, but the sideways is not, look, you cannot make a rectangle from this. This is absolutely an oval. It's got to be an oval pattern. And then you go higher, you break higher, and it becomes the neck. The one-to-one Chapman wave methodology, and I'm just going to do this because every day I've forgotten to do it, if you don't mind. SB is the sugar. And what I'd shown, I'd spoken about, someone had mentioned sugar the other day, and I said, what it's doing, the one-to-one Chapman wave parallel count. And this is the Fibonacci, this is a one-to-one count. And that's a different technique. This is sugar, and it went from, look at this, we're right here at a very, very critical level for sugar. So the next couple of days, I wanted to show that because I'm all about chart patterns. So let's go back to the GLD, and you'll see what I was looking at. Here's your parallel count. Look, you went straight up with that pinky red line. And then when I identified it, it was a straight up move, but it didn't go one-to-one. It did not go to 124. Instead, it went to 123 and then failed. And that's the Chapman wave neck that goes to the head. And I always say the head is sometimes an inverted V. There's no real head shape. It just turns around. And then the head essentially is like the beak of the stalk. And that beak of the stalk, as you know, when the stalk puts its head down, it's got this long beak, and that beak can go anywhere. So sometimes the object here is to get to the top of the oval pattern. If it goes inside, then my rule of 1/3 to 50% says if it takes it out, watch out, because it could go below the body. If it closes below the body, that's why 3 days ago it was so important. Not only did GLD close below the body, it closed below the 200-period exponential moving average. Now it's made a doji candle from yesterday. It's got a little inside bar, and that's the reason why it is so important right now, regardless of major trends, to say, hey, in the Chapman wave methodology, a stalk leg formation beak, that's the down move, can have a look of a left side, right side, price time act. But most importantly, when it concludes, it has a powerful move to the upside, usually going back into the body, sometimes even above, and then you're on your own. You have to use other techniques. So it used to be that it was the beak, and then for years, and for a long time now, I've talked about it as being a potential reversal point. So I'm saying this leg C down to make a peak C confirmation has taken out the 9-period moving average. The MACD is still good in the weekly chart. The stochastics pulled back, but it's still at 84%. And that's the reason why I've been saying so far the weekly chart has held technically not bad. The monthly chart is not great. It's got almost like a sideways V formation, you know, the kind of wedge that we talk about. I'm not even going to bother with that because we will know by Monday or Tuesday whether or not it's breaking to the upside. It's a monthly chart. Anything can happen. But this is where there could be a balance, because now I'm going to go into the socioeconomic part of it. One of the things that I've been talking about here for years, especially over the last 3 years, is the move towards conservatism. And that all this, the swearing that you hear, I spoke about it a year ago. I said, oh, what? And then 6 months ago, and then 3 months ago, I said, what is happening on these shows on NPR? They got this snide kind of giggly thing about all body parts, and they love it. They're like 5-year-olds. And the swearing, I mean, people just accept what's been going on. I mean, it was one of the late night guys. I didn't hear it, but I heard what he had said. You try that in any other period, and this is the period of anything goes. Remember the Cole Porter song? So this is a fascinating period, because as it's showing up, and it always shows up like a triangle at the top, because whoever it is, whether it's Democrats or Republicans, forget about that. I'm looking at it as conservative or more, let's call it open-minded. Maybe open-minded is the word I'll use. Accepting. accepting or not accepting. This is the period that we're in, and if the people have the umbrella headline to say it's okay with a thumbs up, you can do anything and get away with it. But if it's a thumbs down, and even though it's 100% correct or whatever it is, it's out. You're in or you're out. So now let's talk about what's been going on. This conservatism that's infiltrating America, which wasn't seen until the vote, wasn't seen in London. I had this young man from London for a week, and we would discuss some of this, and I know the family and all, very, very open-minded family. Nothing wrong with it. I think it's great. But at the same time, missed completely what was being seen underneath. That's why the Brexit thing shouldn't have been as bright. And I haven't been talking about this for a long time because I wanted to avoid it because I wanted to be looking at the charts. But France is moving in a direction that the people in power have not been recognizing. So you've got to be ready for anything, any surprise on Sunday night. So now it brings me to gold and the dollar. It brings me to the market. It brings me to something I'll talk about in a moment, and that's the difference between right here, what's happened long-term in the Dow. Where did the Dow chart go? That's the S&P. Oh, this is the Dow chart right here. Look how well above its moving average it is. Here's the S&P, not quite so steadily above. It's steadily higher, but not as sharply above its major trend line support from 2016. Was that February? Yeah, February low. Look at the NASDAQ, how sharp it is. It's actually well defined because this has created a new trend line, and that's the support. So the question that Paul had was, on your show today, could you explain the discrepancy of the long-term performance of the Dow Jones average versus the QQQ? Tell us what this really means. What it really means is that the engine of the United States, which has been the growth part of the economy, and that growth part really we've seen in the area of, can I call it high tech? I'll call it high tech, but I'll call it the internet, including high tech, including what happens with semiconductors, all sorts of things that has to do with the innovation of going into the 21st century. And that is represented by the NDX 100 or the QQQ. Look how the transportation index has stalled. So I wanted to just show that. I'll try to talk a little bit more about it. And that's just showing you on a chart formation what's happened. And the explanation is that it would take a little longer, but I want to go back to the charts and I want to show you what I'm anticipating. Great, we've got enough time for it. What I'm anticipating, regardless of what happens Sunday night.
This Sunday, May 7th, the French elect a new president and markets and currencies around the world react. Tom O'Brien has just launched a special for Market Insight subscribers where he'll be hosting back-to-back weekend webinars to break down the market action as France votes and futures react. This Sunday night, May 7th at 5:45 p.m. Eastern Time, Tom O'Brien will host a special webinar as France votes and markets and currencies around the world react to the implications on the future of the EU and worldwide indices. The following Saturday morning, May 13th, Tom O'Brien will host a second live webinar for Market Insight subscribers at 9 a.m., breaking down the previous week's trading action following the election of a new French president, as well as what to expect as we approach summer trading. New subscribers will also receive a free copy of Tom's best-selling book, The Art of Timing the Trade, and this offer comes with a 30-day money-back guarantee. All the action starts this weekend, so sign up now at the front page of TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So really quickly, let me just sum it up. So looking at the E-mini, since that's what's going to be trading on Sunday night, 2394.75, a break above that says that there's a really good chance that you could go all the way to 2397.25, the high of the first, and then just power right through that. Okay? Now, one of the things about the cup formation is that there's a technique in the Chapman wave that I call the Chapman wave cup and ladle. And that's different to a cup and handle. And that says if the cup formation powers right through the left side high, especially if it's at a D, an E, or an F, and this was at a D and a Chapman wave 5 week long. This is the longest. Wait. First, I need to just talk about this 1 second here. If I go to, just for a second, I want to go to the Dow, and I want to say, having had this major move in the monthly charts, to have a technique that identifies the stalling pattern, even if it's just a stalling pattern for the two months, I would say that's a nice technique. Yeah, but the MACD in the monthly is still very good. Stochastic's very good at 94%. That's what I've been talking about. Okay, so in the Dow, it has to go about 20,169 and power right through it. If it does it on, it won't do it this week, I don't think, but if it does it on Monday, that starts E/B. And that becomes positive, and I'll have no choice but to say, great, this is a breakout. I have no choice because the trend is recycled to the upside. But it hadn't done that for 2 months, but it's made the move. The MACD is not great. The stochastic's much better, but it's still only at 66%. I'm not thinking it's going to happen. That's why I'm saying be careful. There might be a surprise because of if you're looking at the socio-political side of it, that's where the surprise could come. I have to be prepared for that. Now, let's go back to the E-mini for a moment, and I wanted to show you, and then I want to go to some stocks because I need to do that. I've got a lot of people wanting some stock information. So this weekly is right there on the cusp. There's been a sell mode in place for a long time, both in the daily and the weekly, and it gets negated the moment it breaks 2397.25 on the E-mini, and in the Dow, the moment it breaks 21,169. And then it might be reset because, you know, my pattern with the double top, cup formation, the drop bucket formation, I am being flexible here. We've got 2 longs, we've got 2 shorts. All of 4 of me seem to be working fine right now, and that's all I can say. However, I wanted to give you the parameters. Now, let's just say that the market just tanks. What if it tanks, and this time, for the 3rd time, it tanks and it doesn't come back? That's the only thing I'm really fearful of, that this time, everyone's going to say, got to buy, because look what's happened every other time. And all of a sudden, whatever the news is disturbing to the market, and the futures are down 15 or something. Instead of being up 20, they're down 15 on Sunday night. then we're dealing with something that says, okay, no big deal. The Dow and the S&P could come back to the recent lows from a few weeks ago. Dow down to 23, the S&P E-mini down to 2317 area, that sort of thing. But it's the Qs that I'm looking at that could start to move down, because they already, I went through this. Remember BEAT? We looked at the number one stock in the NDX 100, Biotelemetry Inc., makes a round number high of 34, peak D, bam, down to the 26s, is trading at 28 right now. If you look at Amazon's completing a move. It's made a peak E. It's ready. Everything's ready, and that's what I'm trying to say. All we can do is the charts, and the charts are saying that so many of these, let me see if Google's ready. Google is in leg G/C. So, yep, it's getting ready, but MACD and stochastic are very strong, as is the weekly chart. So all I'm saying is that I think we're going to start to see a rotation into some weakness. Now, talking about four-letter stocks, is FEYE doing fabulously at 14.76. One of our dentists had picked it up a while back. Great eye, excellent trade. Yes, leg B in the weekly chart, Fire Eye, FEYE. Let me make this a little smaller. And look, it's taken out the left side high. It hasn't closed yet for the week, but that's great. 14.68, and it's above it. The MACD and stochastic are good. For the first time, the monthly, this is still early in the game. If it's able to hold the gains into next week and not even do anything but test 1368, 1335, the gap and the 200-period moving average over the next week. In fact, if it even goes higher from here, this is good, because this is the rotation we have a stock now that's under the radar, just like this is, and it's just kind of acting very well while everything else is not acting very well. Not everything, but a lot. Same thing with cyber. Question, another dentist said, what about cyber? Cyber security, cyber arc, software and security area. Yep, this has got a better slightly better monthly chart pattern. It's already making higher highs and higher lows since its low back in 2016. The weekly needs to get into the 56s to start a move that would take it to leg C. There would be an overlapping C and suggest it should still go to D. So I think I got those out the way I wanted to do. So Paul, I'll discuss that more next week. And Kevin, good points that you've made, but I'm also looking at the different sectors. My contention is that when the Fed comes out with news or whatever it is, very seldom over the years has it been the ictus to turn right at the top or a bottom of the trend. What happens is you might get an intraday or a 1 or 2 day spike, but the major trend stays in place. And you can see that even with the news that we've got, look how all the big spikes have failed. It's only the QQQ. Look at this. They've failed so far. So the price, just make it real simple. The A at YM, that is the continuous contract of the futures. Dow says a push above 21,010. It's at 20,868. That's a pretty big move. On Sunday night, and that holds, it's got to hold through into Monday morning, would not only be very positive, it would suggest that you're going to get your leg D, which is missing, funnily enough, in both the diamonds and in the YM contract, continuous contract. So maybe that, and maybe even the SPY, but no, the SPY's done it. It's gone to a peak D. So I hope those are the parameters that give you at least what I'm looking at. And so ictus is a term when you're conducting. The ictus is right there, the little table that you form to go 1, 2, 3 for the people who are following you. That's the ictus, the bounce-off point. At least that's the way I look at it. Okay, ZTS. Oh, a quick question about, was it cattle? LC. This is a leg C in the alternate count G/C in the weekly chart. Sharp move, intraday move yesterday from cattle going from a high of continuous contract 134.50, and it comes right down sharply today. Be careful. If this the MACD and stochastic are still good, this could still have, if the tide hasn't fully turned, so there could still be short covering has concluded. Now there's this empty hole. There could still be one more move to the upside So just be a little careful about cattle. I was just asked about that, and that's the way I'm looking at it. It hasn't concluded the chart formation in the daily, but the weekly, the 120-minute chart is pulled back sharply. It must hold support at 125.20. That's the 9-period moving average. So yeah, this is the release after that short squeeze, an amazing short squeeze. I'll be back, and we'll look at what could happen on Sunday night in terms of the VIX and other areas. I want to go through bonds. I want to go through gold. I'll do that quickly as we come back. Sorry if I didn't answer all the questions, but I want to get to. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I had a quick question then. What about the EWQ? This is the French iShares ETF. This is incredible. This allows absolutely no room whatsoever for a mistake. I mean, just have a look. It was back in November, it was trading at 23.23. This is the iShares MSCI France ETF, trading at 23.07. I've got it fully notated here. It's trading at 29.27, 20% or something increase, right? MACD and stochastic are good. There's no room for error here. It better hold very well because it's in leg D. But the MACD and stochastic at 98%, this could go on for a little while longer on technical terms. But in terms of the gap, in terms of the expectation, etc., I'm just saying to you, this is very unusual. Now, in terms of the cup formation, yeah, if you put it in perspective, I used to have this all notated. Look, it goes A, B, C. There's your D. D pulls back sharply back in 2011, comes all the way back down, makes a double bottom, goes A, B, C, D, E, F, pulls back sharply to trough D, and there it is, making another cup formation. What would be the high? The high would be 30.73, another dollar from here. So this is a very important moment, and that's the reason why we're talking about it, because it could change the direction of the dollar. Look at the dollar, DXY. Dollar's down at a new low. This is very interesting. Gold, does that start to rally? Nah, it's up a 0.05. So that's the reason why I'm making a big deal about it. Why? Because the Dow and the S&P could spike to new highs, but if they fail under these conditions to make new highs, then I think the next step is going to be the QQQ series starts to make a time and some price consolidation. I just wanted to make sure what I'm thinking and why. And ictus is a noun, prosody, a rhythmical or metrical stress, or two, it's in medicine, a stroke or seizure or fit. There you are. So it all seems to fit. So what we're looking at is a situation where the trend in the Dow remains in sell mode. It'll change if there's a close above 21,169, and if there's a break below 20,800 on Monday morning, that implies something else again. And in terms of the VIX index at lows, historical low the other day, it hit 9 point something. That's one of the lowest lows I've seen, 9.90. The previous low was, wait a minute. The previous low was 9.39 in December of 2006. So it's taken 11 years, and we just saw the lowest low. And that started a big move. Peak A, B, C, D, and the VIX all the way to the bank crisis, 89.53. I don't see that right now, but I just wanted to mention that that's when it was lost. So we'll know. And I will be sending to my subscribers on Sunday night. I'll just send out something. We're in our positions. There's nothing we can do until Monday. I didn't want to get carried away here. Let's see what happens. If gold starts to move to the upside, there are plenty of gold stocks that are ready and looking like they could have a nice percentage move to the upside. You don't have to rely on this one moment, but I did want to talk about it in terms of the trends. And I think I hope I covered it. And to say that the QQQ has not yet changed its trend at this particular time. It will change its trend when it starts from 137.09, starts to trade in the 134.30 to 133.70 area. Might take a few weeks. We'll see. So with that, I think we just about to wrap up. Don't forget, Tom's got a fantastic, it's just a brilliant move. Sunday night, when everybody's really wanting to know what's going on, he'll be giving a webinar. Go to the front page of TFNN, check it out. It's a fantastic offer. Should be great. What are we doing here? Just one quick look as we're about to wrap up. What happened to the 120? Yeah, there it is. Sideways move, peak D in the 10-minute chart. We'll watch it happen by Sunday night. It's not the close today. It's open on Monday. That's really important. Have a wonderful weekend, everyone. And for subscribers, I got a real busy weekend, but I'm going to try to get out some charts early Saturday morning, and then we'll be following up on Sunday night. Have a great weekend. See you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.